All right, everybody. Stocks by the numbers. Welcome back, and we're coming to you live after hours here. And we just had one of everyone's favorite stocks, Tesla Incorporated, ticker symbol TSLA here on the Nasdaq. Tesla just reported earnings, and they missed by a mile. Well, I wouldn't say a mile, but they missed bigly. And I know a lot of people were maybe saying that the stock's already down a huge chunk this year. They already beat it up, and now we could potentially step in at a cheaper price, and we can randomly get a surprise, and the stock could explode. And this is why, in my opinion, I always like to remind everyone that earnings are 100% a gamble, and you should understand the risks involved. Because we have a situation here, like the saying goes, men lie, women lie, numbers do not lie. Tesla just missed earnings on both the top and bottom lines by a chunk, not necessarily a slight miss, like we've been seeing with some other stocks, 0.9%, 1%. No. Tesla missed on the EPS side by over 8.5% and just missed on the revenue side by over 4.1%, posting 21.3 billion off estimates of 22.22 billion, missing by almost 1 billion even. The stock currently is up over 9% at almost $158 for reasons unbeknownst to me, because I'm an old school guy, and like I said, I used to be a licensed broker, used to talk to people all the time about these stocks, used to analyze these situations, and let me tell you something. In my opinion, this is a stock that I don't care what the heck you say to me right now. This is a stock that under no circumstances should be green at all. In my opinion, this stock should be down about 15, possibly 20% from this level, and it should be slowly on its way back to this 101 retest level here, and even lower down there at that 84.40 gap fill that I've been calling for months. And if you want to know why I've been calling for it for a while, it's because, again, look at this. 3 quarters ago, huge miss top and bottom line. Last quarter, miss top and bottom line. Today, miss top and bottom line. This is one of the only stocks that I can think of that can consistently miss on the top and bottom lines, but yet somehow, some way have a positive reaction after hours. Stock currently up about 9.33% right now. Even if you look at the numbers, they're forecasting lower guidance and lower sales figures moving forward throughout 2024. So that's what I mean. I'm not seeing any positive here at all. So the fact that it can even have this reaction, this is why I say, in my opinion, I try to stay away from BS, overinflated stocks that I feel are not realistically valued, stocks that go up for no reason, right? We looked at it last time. Again, you had the big drop here, and then it rebounded right to where it was. And even if we back up even further, again, look, it was this quarter here, I believe, that we're coming into earnings, we miss on revenue, we dip down from 180 to 150, and then the stock rallies back up to almost 300. Remember, they just missed on revenue, but the stock dipped from 180 to 150 and then rallied 100% back up to 300. I don't know how experienced everyone is watching these videos, but I will say, in my opinion, based on my experience, stocks that miss earnings, companies that miss these numbers, do not have reactions like that. But hey, that's just me. Maybe I'm missing the writing on the wall here. As you see, they try to lighten it up, right? Makes cost cuts, invests in AI. I don't know how you're telling me about cost cuts if the company just missed on the EPS side by 8.5%. I don't even know why that would be mentioned. Because my immediate reaction right here is they cut costs, but not enough. That would be my immediate reaction to that, right? But hey, listen, they invested into AI. They're talking about a new model coming out. So forget the fact that the business is dwindling and demand is decreasing. Let's just put all that irrelevant nonsense to the side, right? And let's just focus on AI and making new models that will probably not have the expected demand that they anticipated, just like the existing models. And then maybe 2, 3, 4 quarters down the road from here, we can actually see the stock drop like it's supposed to and head towards that gap fill. But Again, in my opinion, this is why people ask me, oh, what do you think about NVIDIA? Like, do you think NVIDIA would be a great investment? Yeah, in my opinion, NVIDIA would be a great investment as long as they crash it down about 60-70% from its current value and actually bring it back down to earth. Then in my opinion, it would be a great investment. And same thing with Tesla. I know we could potentially be saying, hey, listen, 2027, 2028, the company's going to be bigger than they are now. The stock should grow in value. I appreciate all of that. And if you want to watch the stock ride down to like this 100 even level again, and you want to start accumulating in the low hundreds when it starts to approach that level, in my opinion, I would understand that for the longer term. But what I'm saying is, in the immediate short term, see how we chunk down and have these gaps down here? In my opinion, that is what should be happening. That is what should be happening right now. So the fact that the stock would be flat, slightly green, this is heavily green in my opinion. I mean, we're talking about a 9-10% pop on negative news. So this is a pretty hefty move. This is why I'm saying, in my opinion, stock closed at 144. Stock right now after hours should be at 124, in my opinion. The stock should be breaking down here. It should be back at this consolidated range right here of maybe, we'll call it like between 120, 124, maybe somewhere around there. And then it should actually bounce, probably potentially rise wedge from there, in my opinion, random prediction. But then it should break and it should drop even lower to the low 100s on its way down to that potential gap fill of 84.40 that I'm personally looking for. But again, this is just my opinion. But I am really, really interested to hear how you guys feel about Tesla right now. Because again, if it wasn't Tesla with Elon Musk at the helm, if this was any other stock, it would have got decimated. Again, I remind you of a company like WD-40 that beat on the EPS side and missed on the revenue side by just about 1%. And that stock has dropped 10% since earnings, going from the mid 240s down to the 220s. So that's what I mean. If a brand name company in a space like a WD-40 drops down in value after an earnings miss, then how the hell does something like Tesla run up 9-10% after an earnings miss? Automotive revenue was $17.38 billion in the quarter, down 13% year over year. Name me another company where their bread and butter segment was down 13% year over year and we pumped the stock after hours after they missed. Other revenue up $2.29 billion, rose 25%. That's very nice. But again, that's not exactly what the company does. That's not the sector that they're in, really. Again, this is the bread and butter. This is the bread and butter. And if you have 90% of your revenue coming from automotive revenue, and these numbers are down 13% quarter over quarter, year over year, whatever it is, in my opinion, that is massively negative. This is why I get aggravated with the way we analyze stocks right now. Because everyone looks at, like, these pivot points and these consolidation areas. Oh, it's oversold, so now it reached this point, so now we're going to start popping. And listen, I appreciate all the technicals in the immediate short term. But if we're talking about real stock value and the value of the business and the company overall, in my opinion, the stock should be down 10-15% right now. Easy. And I think we're being conservative based on how much we've run it up in the past, based on also inconsistent and negative numbers. Again, that quarter that I showed you earlier, 180, they missed, dropped down to 150, and then the stock rallied to 300. This is what I mean. If it wasn't Tesla, no other stock would have reacted that way. I promise you. Company said revenue was impacted by lower average selling prices and lower vehicle deliveries in the quarter. Okay, well, being that that's the business that they're in, that's negative, not positive in my opinion. EPS 45 cents, estimates were 51, missed by a mile. Production units respectively declined year over year and quarter over quarter. Deliveries and production declined year over year and quarter over quarter. Figures were also below estimates from analysts. Company said challenges in the first quarter include an arson attack at Gigafactory, Model 3, Red Sea conflict, global electric vehicles face pressure, energy storage up 4% year over year. Yeah, they're adding the supercharger locations. That's fine. This is what I mean. I understand there are some positives, but when we're talking about the actual business of Tesla, It is down. These numbers are down. Demand is down. The stock should be down. Sometimes it's that cut and dry. And again, I know I lean more towards the longer term investment outlook as opposed to the short term trading because, again, as I mentioned, in my opinion, I don't like the current administration. I don't like the current overall stock market valuation. And especially when we're talking about a company like Tesla, it just seems unpredictable. And even I mentioned puts in my opinion, and that's what I mean. Technically, in the numbers, those puts should be up massive right now. And instead, you have a stock up 8-9% or whatever the heck it's doing. So this is why it is very, very difficult when you have this kind of negative perfect storm, in my opinion. That's what makes it even more difficult to do options trading. Because I know, again, everyone and their brother has their own YouTube channel. Everyone charges you guys for trades. And you know, so I understand you kind of hold everyone's feet to the fire. And, you know, if you make a call, you know, oh, this is what you're doing on your channel. So if you're making a call, you better be correct. I can appreciate that viewpoint, but also at the same time, as I remind you again, the average investor on Wall Street, the average advisor, is showing their clients 10 to 15% year over year if they're lucky. And if you have a decent advisor, 7 out of 10, 8 out of 10 of the calls would be correct. However, I'm sure you guys can speak from experience actually working with brokers and advisors. You can have this conversation in the comments section between each other if you'd like. But I'm sure there are a lot of stories out there where you thought you had a good guy on the phone, you gave him a shot, you ran a couple of trades, and the guy missed like 3 for 4, and your portfolio ended up taking a massive hit. So this is what I mean. Even licensed professionals don't have good success rates. So, again, I mean, I'm not necessarily making an excuse, but also at the same time, the fact that over these months and over these years, I've gotten a lot of the calls I made correctly. So the fact that we can look at a situation like this and you can say, oh, you got this one incorrect, you don't know what you're talking about. In my opinion, that is a very, very childish response, and it is a heck of a lot harder than you think it is. Because again, I made the call on the company Tesla 110% accurately. But in my opinion, because it's a fake stock, it is now up 9% instead of being down 10%. Tesla said, quote, "We recently undertook a cost-cutting exercise to increase operational efficiency. We also remain committed to company-wide cost reduction, including reducing COGS per vehicle," the company said. It is focused on profitable growth going forward. Yeah, of course. I mean, you know, what are they going to say? What are they going to say? A war notice said Tesla terminated 6,020 employees at its factory Tuesday. Yeah, that's nice. Citing the investor report, ecosystem is, quote, more than just vehicles. Humanoid robots, self-driving. We have been investing in the hardware and software ecosystem necessary to achieve vehicle autonomy and a ride-hailing service. This is what I mean. This is why if you want to turn around and say, oh, 3 years from now, we may be talking about like a completely different company and they're going to be in all these different sectors and, you know, the revenue is going to be like 3 times what it is now on the annual revenue. So I understand. I can appreciate that. But in the moment, if the company misses by a mile and now again for the 3rd quarter in a row misses on the top and bottom lines, we should be taking this stock lower, in my opinion. I really don't even think it's a debate. I really don't even think it's a debate at this point. Company said it is between 2 growth waves that will see 2024 vehicle volume growth wind up, quote, notably lower than the 2023 growth rate, right? So that basically means, in my opinion, that translates to lower numbers year over year. That's a negative, not a positive. The company said it has liquidity to fund its product roadmap, expansion plans, and other expenses moving forward. Quote, "We have updated our future vehicle lineup to accelerate the launch of new models ahead of previously communicated start of production in the second half of 25. This includes more affordable models at a next generation platform." Let's go to previous grow vehicle volumes. Okay. And the stock still up 8% after hours. So, you know, like, I don't know where they're looking to take this after hours, but I don't even know. I don't even know. Oh my goodness. I mean, if this was our support level of this range, technically we drop below support. But maybe they're gonna climb it up. If we like wedge potentially up to a fib, we hit like the 160 mark, 5:30, 6 o'clock, and then all of a sudden we break and start chunking down and going red. In my opinion, again, this stock should be down 10%. The stock should not be up 8% right now after hours. See a stock like Visa right now getting a 3% pump. I said, in my opinion, there's one of the few companies that are actually benefiting off of rising interest rates, and this is a stock that you should continue to ride because household debt, consumer debt is at all-time record highs. And who are the companies that benefit? The credit card companies. But in my opinion, Visa is the best positioned one, followed by, in my opinion, also American Express, which is actually AXP. Has actually been doing very well recently. But look at this. EPS beats by 3%. Revenue beats by 1.8%, coming 150 million above analyst expectations. And what do I always say about why I like Visa? It's because they just beat earnings. There's a beat. There's a beat. There's a beat. There's a beat. There's a beat, 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 beat. You understand? Visa should be up, and in my opinion, should actually be up much more than 3% right now. But that's just me. I did say my personal price target should be well over 300 here off of this news. We can, if this stock is now up 1 to 2% in change every day moving forward for the next like 2 weeks straight, in my opinion, 110% justified. Tesla, obviously, on the other hand, we have missed top and bottom, missed top bottom, missed top and bottom. Then we have a beat top and bottom. And then we have beat on EPS, but we missed on revenue. We have a beat on EPS, but we missed on revenue. We have a beat on EPS, but we missed on revenue. Now, before the split, the company was rocking and rolling, right? Minus that miss, but that makes me laugh too. The stock splits, everyone keeps it up thinking they're going to... Yeah, I don't know what people were anticipating because the numbers started to come in inconsistently. So this is why, like this random run up, but now this whole sell off that we're in, if you don't understand this sell off, then in my opinion, you should potentially step away from trading and investing and increase your knowledge, right? Because like the old saying goes, knowledge is power. In my opinion, I have to agree with that. So again, I understand on the option side, you want to like poke fun and laugh a little bit because the stock is up and I said puts. Listen, that's fine. I understand. Like I said, I was a broker for a while. Believe me, if you'd think I can't handle some random negative criticisms or a little shit talking or something like that, you got another thing coming. And believe me, I've heard it all. The things people would tell you on the phone when you would try to pitch them stock, you couldn't even imagine the things that people would respond to me. So, you saying like, oh, I don't know what I'm talking about. You said put, like, that means nothing to me. That means nothing to me. Because overall, in the business, I was 110% accurate. And that's why I'm saying, even over the next day or two, if you want to pump this stock up and bring it back up here at 160, 163 or whatever, that's fine. That's fine. Because in my opinion, it is inevitably going to go lower. And if they want to bounce it off the bottom trend line of this trumpet that we had drawn out, again, this is going from the bottom of June 26, 2023. And that was, does it connect right there? No, yeah, it was cutting through the bottom of this candle right there, August 17th, 2023. And now it just so happened to line up with where the stock hit just yesterday, that low of 138.80. That's what I mean. The stock continues to drop down. It hits the bottom of the range. It makes a new 52-week low. It has a relief bounce going into earnings. Earnings come out. They miss by a mile, but the stock is up 8% just because we just bounced off this freaking trend line or something. You understand what I'm saying? In my opinion, we are starting to look at these stocks incorrectly. And this is why, again, I appreciate technical analysis. But when we're talking about fundamental analysis, the actual economics behind the company itself, in my opinion, this stock should be down, down, down. Green is a joke here in Tesla, is a joke. And again, there's probably not many companies out there you can find me that missed 3 quarters in a row on the top and bottom lines, but see a positive reaction. It is so few and far between, and usually it happens if a company, randomly increases a dividend or announces a dividend, maybe like we're going to see with Rolls-Royce, in my opinion, potentially reinstating their dividend. That's what I mean. Because even though the company's going to now be on the hook to pay out more to shareholders, it's actually viewed as a positive because, analysts alike, they all know that much more volume is now going to flow into the stock because it is now a dividend payer, in my opinion. And on the flip side, sometimes you see a bump like this if the company announces maybe an increase in a share buyback program or something like that, right? But that's what I mean. We just looked at a lot of what the company told us, and in my opinion, I am seeing nothing but red flags. This 7-8%, wherever the heck it wants to go here, up to this trend line, 164, whatever, it doesn't matter at this point because the stock is no longer realistic, in my opinion. So wherever it goes, it goes. But in my opinion, this stock should actually over time drop to about almost half of where it was. And I just want to recheck those gap fills real quick, and then I'll let you go. As you can tell, I'm a little passionate about this situation. We have a gap fill here, 84.40. Next potential gap fill, 81.67. And if we come in there, we have that other gap up. This is what I mean. People want to talk about the technicals, but when I talk about a massive sell-off and a gap fill that should be happening with Tesla, then all of a sudden it's not about the technicals and I'm reading it wrong. Here we have a high 75.69. What I say, stock should be down 50% from where it is right now. Fill those gaps. Red numbers and big misses means a lower stock, not a higher stock. So that's what I mean. You want to bring it up and you want to dance it around and basically screw over all the traders who had puts and, in my opinion, called it absolutely correctly. You want to screw all those people over? Fine, whatever. But in my opinion, I would absolutely not be a buyer of Tesla personally in this moment. And if we wake up tomorrow and the stock is up 8% here in the 150s on its way to the 160s, in my opinion, I would be buying puts with time if possible, because even if they run it back up here to this line in the next day or two of about 160 and change, it should immediately reject and then fall off a cliff and continue riding down this bottom trend line here to the 120s and even lower, in my opinion. And with next earnings coming up again, looking like the middle of July, in my opinion, even if it bounces around off of this trend line, it will continue to make new 52-week lows. And then, in my opinion, going into this next quarter earnings, the stock should actually technically go down instead of going up, because now we're probably anticipating what is going to be potentially a fourth miss in a row on earnings on both the top and bottom lines. Let's check stock charts real quick. I'm working myself up. I had a lot of coffee today, and it's a situation like this that just really aggravates me with the market. Because again, I know that earnings prediction video, my personal predictions today, I understand that video came out a little bit late, so a lot of you may not have seen it. However, practically all of those calls that I made were correct. STX is flat right now, I believe. They had a little bit of a mixed quarter. I mentioned calls in my opinion, so I guess right now in the moment we could chalk that one up as a loss, but the only real big miss is Tesla. And Tesla was called absolutely correctly. And now the stock, in my opinion, is up literally for no reason after hours. But we can see it could potentially maybe try to get back to this mid-Bollinger Band, 165.23. In my opinion, it really shouldn't. Again, I know we had the low RSI. So, the traders who are, of course, holding calls, or who recently stepped in on those lows and bought Tesla shares, of course, they're not going to agree with anything that I'm saying. And I understand that. I understand the game, but I also live in reality. And again, the reality is the company missed earnings by a mile. That's 3 quarters in a row, top and bottom lines. Stock should be down 10%, not up 7-8%. I think that's more simple logic and common sense as opposed to overanalyzing the situation. But yeah, in my opinion, see that bottom Bollinger Band right there, like sub 130, in my opinion, that's where the stock should be. That would be, like a 15% haircut, which would be about, 9%, 10% and change. In my opinion, that is where the stock should be right now. But again, you want to make the argument, oh, the RSI was down at 30 and we hit the trend line, so we got to bounce. Hey, listen, whatever helps you sleep at night, And this is a situation where, in my eyes, you can't even really brag or boast if you bought calls or just bought shares. Because I think we all see the writing on the wall. And we know that there may be more tough times and more sell-offs and more and new 52-week lows ahead for Tesla. So listen, hey, I'm not knocking the grind. If you guys happened to step in and you bought some calls on Tesla, I mean, now you're up 8%. So listen, congratulations. I'm so glad that you made a few bucks. However, on the flip side, I do feel that a lot of people felt the way I did going into these earnings. So they may have pulled the trigger on puts. And now those people who in my eyes were absolutely correct with this call are now being screwed, and the stock is bouncing 8% for, because there's a model coming in inside of the next 12 months, and they mentioned AI. And in my opinion, this is just silly at this point, because I just don't see how this is the exception to the rule. You know what I mean? This is a motor vehicle company. They make cars. Theirs happen to be electric. But at the end of the day, they missed earnings now 3 quarters in a row and are forecasting lower demand and potentially more obstacles moving forward. So I do not see how that is a positive. And that's what I mean. You make an announcement like this. Oh, we're talking about maybe throwing out an app. It's like, yeah, that's great. But the stock, in my opinion, should have that reaction when the app goes up. When the app is up and they say, oh, listen, traffic is much higher than we anticipated. This is really going to end up generating even more revenue than we thought. That, when you get a report like that, that is what should help pump the stock up. But I just feel like this is just like a Band-Aid in the moment. It's like, yeah, we know we missed again, and the future looks bleak here in the short term. Oh, but hey, listen, we made this new app. It's like, this is why I say options trading is very difficult. Options trading is very difficult. And on the investment side, right? If you also want to say, well, you said maybe you wouldn't have bought shares here in your opinion, but now the stock's up, so now I'm overpaying for share. Let me tell you something. Technically, over time, if you give this thing a couple of more months, technically, in my opinion, we should be dropping down, we should be selling off, we should be consistently making new lows. I think that this pop right here off of this app nonsense, if that is the catalyst, off of that nonsense, in my opinion, will be very, very short-lived. But hey, again, anyone holding calls or just bought shares, congratulations. I'm happy for you guys that the stock is seeing a bounce. Any of you guys who just jumped in puts, unfortunately, this is the way of the game. This is why, option trading is so difficult. And this is why, again, earnings especially, like I always say, are 100% a gamble. Please understand the risks involved. But also at the end of the day, if you saw the writing on the wall, saw that the company was struggling, felt that the numbers would be light, so you stepped in on the put side, in my opinion, even though you're wrong here, I think you made the right call. And because the numbers came in much, much lighter, and they're forecasted to remain light and below expectations. So even though you were wrong, in my opinion, you should pat yourself on the back, because technically, in my eyes, you analyzed correct. And that is why I also said, in my opinion, puts on Tesla. So, there's still time to go after hours. And of course, anything can happen, pre-market, before market opens. But in my opinion, if this stock is up 158, 160, back at this trend line, in my opinion, I would immediately buy puts. Because I see this app, it should not be the reason as to why this stock level is being sustained right now, in my opinion. But I'm going to end it there because we're beating a dead horse. So once again, this is Stocks by the Numbers. I want to thank you guys for stopping by. If you have any questions, comments, or concerns, drop it down in the comments section. I'm usually very quick to reply. Thumbs up algorithm helps me get more eyes on the channel. And of course, subscribe to the channel. That is our handshake agreement. That is how you help me help you. But more importantly, moving forward, like I always say, I understand that markets are rocky and volatile and very uncertain. So I want to wish all of you success. I hope everyone makes a couple of dollars. Thanks for stopping by. Have a good day, guys.